No question. It's Barry Sternlicht, the CEO and founder of Starwood Capital. Barry, great to see you back in Davos. 8 months ago, it wasn't here actually, it was in the springtime, you bemoaned to me that the government was creating an unlevel playing field, supporting the banks like Goldman Sachs and Morgan Stanley with rocket fuel financing and letting them compete with the likes of Starwood Capital. Who's having the last laugh now?
Oh, their stocks are moved pretty rapidly. I think they're still laughing.
Sounds like to me they're going to be paying more taxes than you will.
I think if you gave small enterprises $30 billion at zero or allowed us to borrow with government guarantees, we could be pretty profitable too. So from that perspective, I think they did exactly the wrong thing. I know that we needed to save the financial system, but it was a little ad hoc. And for small businesses, and they really are, we own some small businesses. We own a restaurant company. We own Mammoth Mountain in California. It's the second largest ski resort in the country. And there's nobody lining up to give us financing. So, and the government has not made any programs really available to smaller businesses, and they are starving for capital. I mean, you can't roll over debt if it's a $10 or $20 million loan. So, I think the system will work its way out of the mess it's in, but it has not exactly been a level playing field.
So given the fact that it was not a level playing field, do you think it's right for the administration to go back and tax the 50 largest institutions like Goldman, like Morgan Stanley, like Citigroup, like Bank of America?
It's really about coming up with a system that everybody can trust. And to label all the banks the same is a mistake. There are good athletes and bad athletes, and you shouldn't penalize all the players. Some of the banks were pretty disciplined, and actually they should be rewarded. And what would you pay a CEO of a bank that didn't have a $500 billion loss in its book? Right. Well, why? I think the system is not set up correctly. I mean, to penalize all the banks equally or based on their market caps doesn't make any sense either. So I think, like the healthcare bill, I think the American people want this well thought out, but we do need regulation in a big way. And what happened in the mortgage market, which is something we're benefiting from now as we work in the distressed markets, I mean, what happened in the mortgage market should never have happened.
Speaking of the mortgage market, what are the implications for you? What are the implications for real estate of the Fed ending its mortgage-backed security purchases on schedule next month?
Rather
in March.
What's interesting is the Fed went in and said, we're going to basically give you a full guarantee on the agency paper, Fannie Mae and Freddie Mac. And I think what they did there is said, look, we're pulling out of the mortgage markets, and all you guys have been buying our treasuries, and rates would back up, but go buy the agencies now. So the banks that have not actually been lending and have really been using this short-term, incredibly steep yield curve to borrow for nothing and buy governments, we'll go over and buy agencies. So I think you'll see an increase in rates, but I don't think it'll be major. I think it'll be modest, maybe 25 or 35 basis points. What we need, though, is for the banks, I think short rates have to go up so the banks will go back to lending and earn their spreads and capitalizing and helping the American economy grow. Rather than just purchasing passive paper and earning the interest rate spread to recapitalize their banks that way.
From the perspective of your business, what are investment prospects like for 2010, say, relative to what we saw last year?
We are pretty happy about what we're doing these days. I mean, as hard as it was to invest in the global property markets in 06, 07, early 08, because there was all risk and no reward. Prices were crazy. We were very busy in 09. We invested more money in 09 the last 3 years combined. And it's continued into this year. I mean, this is one of the great, every 20 years is a really good point of entry into the property markets. And we think because rates are low, because you're buying stuff below replacement cost, because the U.S. as an economy itself is growing and the population is growing, growth will bail you out. So if you pick your spots and you really do your work, and look micro, look by zip code, you can find interesting things to do in the property markets.
Very quickly, single most attractive place to be investing right now for you?
For us, should I tell you that on national television?
Of course you should.
In Bloomberg stock. No, you're not public. And we like residential land.
Residential land. That's Barry Sternlicht, CEO of Starwood Capital.